Good morning, students. I, Mrs. Shruti Kulkarni, welcome you back for the next class on journal problems. In the previous class, Madam has told you all how to pass journal entries, or you will have seen two examples. Now we'll see one example with large number of transactions. Yes, when you are going to start the problem, always first remember that you are solving these transactions and you are representing Banu traders. So you are an accountant, or you yourself is acting as Banu traders. So first and foremost, every transactions that you are dealing, you should remember that it belongs to you and you are the owner of this business. So take a book and pen and just go on writing these transactions as and how. So first you have to record all these transactions on a piece of paper, and then at the end of the problem I have given you all certain important tips that you have to remember when you are going to pass journal entries. Yes, now at the end or in the next slide we are having the solution. So somewhere in the corner of a page, just write down the rules which are shown in the red ink. Which are shown in the red ink, that is increase in asset and debit and credit. Now whatever is given in red ink is the rule that is going to be used when we are going to pass the journal entries. So these sign the upward, the upward part, the upward arrow will be showing the increase, whereas the arrow which is showing downward is the decrease. Yes, now we are having the problem. So along with the problem, here I have given the details of transaction. This particular column is not essential to be drawn when you are solving journal. This is just for the reference that I have given, so you need not draw this particular column. The actual journal starts from date, particulars, ledger folio, debit and credit. From this particular part only is the part of journal. This transaction which I have given is just for the reference to see how the transactions are being passed. So on 1/12/2017, problem states started business with cash. So now we are having two assets. So first step, whenever such journals are to be passed, is to think yourself as Banu traders. Second, when you are starting the business, you have to see what is the transaction between you and your business organization. So first, when I say started business, that means you are going to get in cash or making capital investment. So you are having two accounts. One is cash account. Cash account is an asset and capital account is classified as capital only. So now the rule, you just see the red ink or the previous slide where you are having the rule of asset and liabilities for debit and credit. It is given. So this is what you have to write important and just refer these rules. It is very important while crossing the journal entries. So when I say started business with cash, I have one account, cash account, which is an asset. Now the rule for debit, increase in asset. So cash account is to be debited. Now the other account should always give a credit effect. So you are having capital because it is investment. So I am having cash account is debited to capital account. It is 92,000. In the respective columns you have to write narration, started business with cash. Next, you are having bought goods from Himani on credit. Now when the word credit is there, it shows that Himani is our creditor. So Himani becomes our liability. It is a obligation. It is our responsibility that we have to pay Himani. So he is a creditor. And whenever the word bought comes, that means we are purchasing goods. So when goods are appearing in the transaction and if the word bought is there, it represents purchases. So you are having purchases. Purchase, it's an expense. So when expense is there, as per the rule of debit, it is increase. So you have to see the rule. So increase in asset is debited and the Himani is our creditor. So it is a liability. So liability also increases. So it is taken on the credit side, 40,000 and 40,000. Now coming to the next transaction on 8th, returned goods to Himani. Now when I say returned, in the previous transaction I have purchased from Himani. Now when I am going to return, that means my liability is reduced to the extent of 4,000. Therefore, I will show Himani on the debit side because it is decrease in liability, and purchase returns because goods purchased are returned. That's why it is called as purchase returns. So purchase returns is a income or gain because we are reducing our liability or not paying to the extent of 4,000 to Himani. So transaction is Himani's account is debited to purchase returns. Now narration, returned goods to Himani. Draw the line so that your journal entry will be completed after each and every transaction. Now come to the next transaction, 10/12/2017. Sold goods to Goyal traders. Now the word of the transactions that are appearing is sold, that is representing the sales, and Goyal traders. Now we do not have any cash which is being said in this transaction. So when cash is not mentioned, it is treated as credit transaction. So when there is a credit transaction, the name of the debtor or the supplier will be appearing in the transaction. So you are having two accounts, one is Goyal traders, other one is sales. Now Goyal traders are the debtors because they are assets. They are increasing. We are supplying the goods. So Goyal traders will have to pay us. So we have to receive some amount from Goyal traders in the future date. Therefore, Goyal traders are treated as debtors. Debtors are none other than the persons who have to pay to business, or in short they are called as Salgaru. So debtors. So Goyal traders are assets, increasing our assets. So Goyal traders is debited. Now coming to sold. Sold means nothing but sales. So when goods are sold, that means we are generating income on account of sales. So when sales are done, it increases our income. So increase in income is credited. So Goyal traders account is debited to sales. It is 35,000, 35,000. Write narration, sold goods to Goyal traders and draw the line. So the transaction is complete. Next you are having on 14/12. Now check given to Himani. Now 36,000. Now here we are having two accounts again, check and Himani. Now whenever checks are given, remember bank is paying on behalf of us. So when the word check comes, we are going to always use the word bank. So you are having two accounts. One is Himani's account, second one is cash account. Now classify both these accounts under which category they come. Himani, he is the creditor. So when we are paying him certain amount, that means my liability is reduced. So when liability is reduced, it will be debited. Then we are paying check. So when check is being paid, that means your bank balance is reduced. So decrease in asset is on the credit side. So decrease in liability is debited. That's why Himani's account is debited. Decrease in asset is also debited. So bank account is credited. So you are having Himani's account is debited to bank account 36,000, 36,000. Next one, on 17th, drew cash from bank for personal use. Now when I say personal use, that means you are having certain withdrawal for private purpose. So when private purpose is done, you are having drawings account. Whenever the word private, personal comes, you should say it is drawings account or represents drawings account. So drawings account is again capital account. So whenever there is reduction in capital, it is to be debited. And when you are withdrawing cash from bank, so other account is bank account. One is drawings account, one is bank account. Your withdrawal is from bank, so bank balance also is reduced. So decrease in asset is credited. So journal entry will be drawings account is debited to bank account 3,000 and 3,000. I hope these journal entries are clear. Now we'll go for the next one. Yes, now the next transaction you are having again on 10/12/2007. Yes, this is just giving the details of transaction. This column is not essential. Your journal will start from date, particulars, ledgers, debit and credit. Now on 10/12/2017, goods sold for cash 20,000. Now when goods are sold for cash, that means you are having two accounts. So what we are going to do? Classify them first. So one is sales account, one is cash account. Now these accounts, they belong to which transaction? Cash is an asset and sales represents income. So cash account is to be debited because it increases by 20,000. So I'll write cash account debit in the particular columns. Why it is increasing? Because there are sales done. So sales is increase in income and is to be credited. So cash account is debited to sales account 20,000 and 20,000. Sold goods for cash. Next one you are having on 14th. Check given to Himani. Now we have seen, we have returned goods, we have paid to Himani. Again we are going to have the same transaction. So Himani's account is debited because check is paid. So reduction in liability, creditors is reduced, therefore it has to be debited. Now check is given by banks or banker is the payer. So whenever the word check comes, bank account appears. So balance of bank is reduced by 36,000. So being an asset, you have to show credit decrease in asset. Narration, check given to Himani. Now on 17th. So on 17 you are having goods sold to Goyal traders. So when goods are sold to Goyal traders, we are having two accounts. One is sales, other one is Goyal traders. So when goods are sold to Goyal traders for 35,000, so Goyal traders account is debited because it is increasing the asset, and sales are credited because there is increase in income. So 35,000 and 35,000. Next, withdrew cash for personal use, that is from personal use means drawings. So drawings account is nothing but withdrawal of capital. So your capital is reduced by 2,000. Therefore, in credit debit decrease in drawings, that is 2,000, and from bank you are withdrawing, so bank account being asset, it is also showing decrease in asset, that is 2,000. So narration, drew cash from bank for personal use. Yes, now the next transaction on 21/12/2014, Goyal traders returned goods to us. Now whenever Goyal traders are returning goods, we have sold goods in the previous transaction. Now these Goyal traders are returning back the goods which we have sold to them. So when they are returning back, or whenever goods which we have sold are returned back, is treated as sales returns. So sales returns is nothing but it is a loss or expense, because we are not receiving that amount of sales, so it is a loss. So whenever loss is there, the same treatment of expense is to be done. So you are increasing the loss, so it is debited, and the debtors are reducing themselves, so decrease in asset is credited. So Goyal traders are debtors, so they are decreasing themselves by 3,500. So journal entry, sales returns account debit to Goyal traders account 3,500 and 3,500. Next, you are having on 22nd, cash deposited into bank. Now two accounts are cash account and bank account. Cash being decrease in asset, and bank increasing the balance of bank, so increase in asset. So increase in asset is debited, so bank account is debited, decrease in asset is credited, cash is decreased, so it is on the credit side by 20,000 in both the columns. Narration, deposited into bank. Now on 26th, check received from Goyal traders. Now when I say check is word is coming, always bank is existing, because checks are deposited into bank, or whenever checks are being paid, we clear it from the banks. So when checks are received, it is sent to bank for collection. So check received or checks, word check comes, bank account is existing. So whenever check is received, bank balance increases. Bank being an asset, it has to be debited because increase in bank balance. Next, you are having Goyal traders. Now Goyal traders are our debtors. So when they are making the payment on the given date, that means their liability is being reduced. So 31,500 only is to be shown on both the sides of debit and credit. Next, on 30th. On 30th, we are having salary paid. Now, when salary is paid, salary is a expense. All expenses and incomes are always received or paid in cash. Therefore, salary is one account, another account will always be cash account. So, cash account is debited 7,000 because it is increasing the expenses debited. And next, cash being an asset, decrease in the value of asset, so it has to be credited. So cash account is debited to salary account is debited to cash account 7,000 and 7,000. Narration, paid salary. Now the last transaction on 31/12/2014, office machinery account office machinery purchased for cash. So you are having here purchase of asset. Whenever purchase of assets are existing, it is for the use of business. So purchase of asset is not treated as purchases. Purchases will come only when goods are purchased or sold. So whenever assets are purchased, the name of asset has to be said. So you are having machinery account and cash account. When machinery is purchased, that means increase in asset, so it has to be debited. So machinery account is debited. Now immediately we are making cash payment. When cash payment is made, that means asset account is decreased, so it has to be credited. So machinery account is debited to cash account. 3,000 on the debit side, 3,000 on the credit side. Narration, sold goods for cash. Also not sold goods, it is purchased machinery for cash. There is a print mistake, so it should be purchased machinery for cash. So don't write this particular narration. Whatever is the description, this description only has to be written. So here it is a print mistake or a typing mistake. Not print mistake, it's a typing mistake. Now I told you all in the beginning of the slide that what we are going to see is the important points. So first and foremost, remember that all transactions, whether paid are paid in cash or bank. Similarly, all incomes are received in cash or bank. Only when the word check is appearing, that time bank is taken for expenses paid and incomes received. Next, when transactions are given, first assume yourself to be the business and you are dealing with these transactions. So first step is to classify the accounts given in the transaction. Next, after classifying, apply the rules of debit and credit. So the rules of debit and credit can be written somewhere in the corner of the page with the pencil, as we have shown on the first slide where solution is done. Next, once if the rules of debit and credit are done, record the journal entries as per the debit and credit. That is first debit, then credit, and then lastly you have to give the narration for each and every transactions when it is recorded and draw the line. So this comes to the end of the slide. So remember students that whenever you are passing journal entries, every journal entry should be assumed that you only are doing the transactions. Then it becomes very easy for you all to classify what is given and what is the taken benefit. Now the question comes, what is debit and what is credit? Now in local language, if I have to say, debit means all kharchu or expenses, followed whatever is given off, that is coming under debit, and whatever is received or remaining is called as credit in practice. So the word jama kharch, what we do, whatever is jama is credit, whatever is kharchu is debit. So if you all know what is coming in, what is going out, and classifying what is the asset liability, your journal entries will be very easy. For any doubts, you all can contact us anytime. Thank you.